5s and we're going for a 10-point target. I don't know. Let's see what Jack's got. Let's see what he's done. Let's see. But this was a waste of time. This 12:30 that's a waste of time, really. But all right, let me mute this thing.
All right, thanks, Neil. Awesome stuff. Good afternoon, everybody. Let's do a quick audio check, just make sure we're good. Sweet. Good to see you, Force. Happy Friday, everybody. Look at this little bit of a small rally into the end of the monthly expirations here. Man. So let's just kind of jump into things. As far as a level for the S&P's trading higher, I mean, we're kind of already up to what I thought would be my end of day target. We discussed this yesterday. Most days now I'm disgusting. I mean, that's not true. Come on, that was a mean thing to say about myself. Most days I'm discussing what we talked about the day before, just to get some context. So we've kind of already come into what I expected to be a high for, I mean, the day, sure, I guess, but really in the afternoon, if you take a look at this hourly chart, it may not be. And so looking at this hourly chart, you can see that we have good green 10x bars. Everything's looking pretty solid to the upside. And then, you know, we're kind of jumping back into a key level that is about, I mean, 25 points higher. But that's kind of a weird thing to say whenever the market's only up 25% or 25 points, and you know, we're the only market open. And I know that we've, you know, come a long way. I mean, we've basically called out the turnaround from turnaround Tuesday, this move all the way up to where we're at now. So the question is like, where is it going to go now? So that's something we can just dive in together real quick. I'm trying to get the drawing tool up here. Maybe this will, I had to do a quick reset. There we go. Sweet. So we'll get this up here and I'll kind of talk to you about the 1, the 5, and the 15-minute chart just for a second. So let's go ahead and do that. Bring this down. And we'll first do it on the S&P. So whenever I look at this, I'm typically focusing on the 5-minute to see if it's above the reversion to the mean, and it is. Looks like this reset. Hold on. There we go. So here, typically on a day like this, I look at this magenta line on the 5-minute, and you know, this is a very clear buying spot, right? The hourly chart here, again, just kind of taking note of the squeeze. But on this pullback, remember, we're getting a little bit of a micro squeeze. So on the 1-minute, it's trying to fire to the downside. So I don't have too much of a bullish target yet. I think the whole idea of letting this retrace maybe a little bit further down below the reversion to the mean, it could be 44.20, maybe even 18. See if you can get one more break out of this first ATR and then buy it. That makes sense to me. We'll kind of continue to look at this on smaller time frames as well. So we'll bring this hourly to a 15, and the 15 historically today has just been holding this first ATR. So looking at that, going, okay, well, what would a flush mean? It would be about 44.17, because that is basically, if you go back to the very beginning of, like, I don't know, 11:30 print is 44.16. And that also lines up. And by the way, if we get some, you know, negative ticks or anything like that, I mean, that's only 10 points away. It is the S&P. I know it's been kind of a weird Friday where all of a sudden it just jumped up, and once we were above 44 4,400 going into that 44.25. Remember yesterday how we were talking about like 52, right? 52, I believe. It's either 52 or 65. It could have been both. Let me scroll up to see if we can. Let's see here. Well, we know for sure that it's in the 50s. So I'm looking at this very
So it's simpler. We decided early on to kind of really open the kimono.
This is a great place to learn and to become an independent trader on your own.
If we're doing a trade, we tell you why. If we're getting out, we tell you why.
They're just doing what they say they do. You know, they'll just help you be a better trader.
Putting our money where our mouth is, trading our own accounts, making our own decisions, and showing you what we're doing. Try the Options Gold Room for only $7.
16, you know, anywhere around that level, maybe worst case scenario. Yeah, no, I mean, 16 is kind of pushing it, honestly. So that's kind of where I stand with that. Let's take a look at a larger time frame on, let's just put up the Qs. At this point, it doesn't matter. You can just put up any index just to get an idea of showing you kind of what I was talking about the other day on Wednesday, where we're very close to like doing or like fulfilling a double bottom. Like we've already made it. So there's one down there, and that's the beginning of February. There's another one down here, that's the bounce. And then the question is like, you know, where's the target? So one thing that I look for is the 200 simple. And in this environment, this kind of choppiness that we had that was real nasty to trade. I mean, this was, you know, take a screenshot of this. This is February to March was just kind of disgusting, right? So very difficult to trade unless you were just long commodities, which in some instances we were. But what I look for is
At Simpler Trading, we show you how to trade with our own money.
You have to find real traders who are making real money and imitate them and learn from them.
If we go into a trade, we tell you why. And when we exit a trade, we explain it.
They're just doing what they say they do. You know, they'll just help you be a better trader.
We are so confident that you'll love our day trading room. We're offering a trial for $7. Check it out.
Some people call this the dub diamond. I don't know. There's all sorts of names for it because if you do get it, you know, it's just basically the market saying, hey, we're rejecting all this stuff down here and this wants to push higher, but we just got to pick up some buyers. That's the kind of situation it is. And also if you want to draw like, you know, like a panda with a nose and then like a little mouth, he's got like a third eye right there. You can do that too. So all sorts of things you can do. So here's the heat map. Everything's just kind of more green. Tech is holding NVIDIA.
We're a trading community, trading with our own money. Simple as that. If we enter or exit a trade, you'll know how and why we do it.
They're just doing what they say they do. You know, they'll just help you be a better trader.
While secrets are fun, keeping them doesn't help you learn how to trade.
This is a great place to learn and to become an independent trader on your own.
We're so confident you'll value your time here that we're offering a $7 trial. Go on, give it a shot.
Or Tuesday, like in other words, let these names continue to push back into their previous highs in February. And then from there, like if you want to short, like go ahead, because you know, it might make sense, right? But we don't know about that until about Monday afternoon, Tuesday. So in other words, I'm not betting against this market. I think follow through on Monday, Tuesday is very possible. It's very possible. We've seen it before. And let's talk about crude for a second. And we'll keep an eye on the S&P. I mean, it's not going anywhere. I want you to get at least something under 20 because it makes sense within our time frame. So, you know, if we don't, I guess we just won't. But let me answer a question here. Hey, Graham. Hey, Karthik. Palm. Good to see you. Jake. Where does the 15 come from? Second ATR on the 5-minute. Good question. So the 15-minute is more of an observation and not like a technical thing. It's just more like context, like how has it traded above its respected Keltner channel? How has it traded above or below a, you know, the 8 here, which is the light blue line? You know, when was the last time it dipped down below its Keltner channel? So it's not so much like a technical thing to like enter or exit a trade. I say that, but keep that thought on hold. We'll revisit that here in a second. But the 5 minute is if you want to buy a lower ATR, I typically go, if you can, like travel back to ATR, not down to the second ATR, but like one back to the reversion to the mean, back down below to the first ATR. That's 2 ATR. So buying that down there on the 5 minute is kind of the method to the madness. But again, you may not a lot of times get the chance to do that in a strong bullish trend. Sometimes you just get the reversion to the mean, kind of like today. But you did have one instance back here at the 1030 print, 1045, where you did almost come back down all the way full 2 ATRs down to that lower one, if that makes sense. And we can go through more examples of that. But so the 15 minutes more for context. The 5 minute is like, you know, it's the largest time frame in a very bullish trend that I'll try to buy the reversion to the mean. So either the white line, or if I'm really looking for a day of a lot of volatility, you know, going down to one of these lines, the yellow or the orange, which would be the first and second Keltner channel. So kind of letting the market come to you. So we're going to come back to what I was talking about with the 15-minute chart. Now pay attention to this. This is important. A lot of traders use the 30-minute chart to take the opposite of an extreme move. And you can see why that makes sense. You just have to be in your trade a little bit longer, right? Because, you know, I know this is kind of the overnight, so maybe that's not the best example. But a lot of people, once we get out to here, the second deviation or the third ATR, they like to short this, right? Because on a 30 minutes, it's a lot of time, right? And for me, it's more like of a longer term trade. You really need about, you know, most times like 30 minutes to an hour to be in the trade for a significant pullback from all these extreme levels on the 30-minute to happen. But you can certainly do this too on a 15-minute chart. It's just less time that you're looking at or that you're observing, and maybe more suitable on a more volatile day. Okay, so yeah, that's the way I'll frame that there. And then the 1 minute, you know, if I'm doing my own thing, just kind of on the 1 and the 3, that's for really fast pace. It's a high volatility day. The 3 minute can be bonkers and kind of go everywhere. So I'm also looking for an extreme there to either buy this down here or to sell this up here. But remember, that's all great, that's all cool, but I'm only trying to really go with the trend most of the time. So what I'll do is I'll wait for this move to pull back, right? And if it makes sense, and I'll line this up, you know, you see that lower first ATR on the 3-minute chart, that takes you down to about 44.24. Well, I was talking about 44.20 and 16, right? So that would mean that this 3-minute chart, which it's not going to do it right now, it's, you know, it would have gone lower down here and that would have been fine, but looks like we got some positive ticks and the market just continues to go up. So, you know, buying the 5-minute reversion to the mean here on the far right-hand side is, you know, you're getting a few shots, but you can see there's the 1, the 3, and the 5. So the 3 is kind of difficult if you're going to look at the 5, because then you have to remember semi-smaller time frames. Right, so just use one or the other. Don't confuse it. If you're going to be, if you're a newer trader, I'd say stick with the 5, and then kind of line that up and see what it makes sense to do at the 15 and the 30-minute chart. But stick with the 1, the 5, and the 15. I feel like that for me, and for maybe a lot of other people, would just be a little bit easier instead of, you know, a 3-minute chart's not much time. So I'd hate for you to be, you know, caught in the middle of a move whenever it looks good to you on the 3, but it looks horrible on the 5. And that's what you got to look out for. So stationary 1, 5, and 15. And then kind of whenever you're ready to maybe be more in tune with the market or something, trade on smaller time frames, maybe use the 3. The 3 can help you out because you can see a squeeze sooner than the 5, right? That's the main point. That's the main point, folks. So wow, I mean, the market got bid up pretty nicely here whenever I was talking. Let's talk about crude for a second. Oh, great. Okay, cool. I already had crude up. And by the way, yesterday we talked about Tesla. It's almost up to 900. It was earlier. I take that back. I guess it didn't hit 900, 898.5. But we kind of nailed that one too. You know, talking about targeting certain tree line. Let me move this chart over. It was either yeah, there it is. So boom, perfect. I mean, was anyone long this week on Tesla and looking for that Friday rally? This is what, I mean, you could go back to these recordings from the week, just basically saying, hey, we're really crossing through these snow lines, sky lines, fire line. And on the daily time frame, it looks really solid because you have a like you're very, very close to last week's L1 or H1 rather. Still getting that right. Boom, perfect. I mean, and it still has room to go. That's why I'm saying on Friday at Tesla, whenever it rallies, I cannot tell you how many times the next following Monday it is just up again and it's, you know, back into its previous month before highs, and that squeeze is still firing. Like it's not letting up. I wouldn't be surprised if Monday's very bullish. It just kind of seems like we're going that way. Let me take a look at volume profile. So everything's holding up pretty well. Hey, Debbie, good to see you. So crude looks like it wants to just chop around, trade sideways. Not so sure. I'd still be trying to buy this. Yeah, no, I don't. I mean, I'm not ever going to suggest you hold a crude position over the weekend, but I think we're waking up to this being below 100 again, at least revisiting 96, 97.5. Because from a chart perspective, I'm trying to just base this off of a smaller time frame, not so much the daily. We already know what the daily looks like. So the hourly, you can kind of see where we're kind of bugging out here, below 104. And, you know, this squeeze, by the way, down here is trying to lose momentum and decompress. So we'll see. I mean, it's going to be an interesting weekend, and over the weekend, we'll maybe get a little bit more of a futures bid, but maybe that fails ultimately because we know crude has been, you know, the intraday moves are just fantastic. I mean, this is pretty gnarly chart here, this hourly. So we'll see. For me, it just makes sense for this to trade within range back and forth between these tree lines for a minute, for about, you know, a week or two, depending on all the, you know, geopolitical stuff. All right, S&Ps. Just climbing here, 44.31. Never really broke down below 20. I don't have too much more of a you know, call out on this one. I know our target is from here, it's like 44.52, but I don't know. That seems to be a little bit of a stretch. So let's look at gold real quick. Gold started to become a little bit more interesting whenever it crossed below 1950. So I've kind of talked about how I think this is going to be breaking back down below 1900 temporarily. The reason why is you have kind of this weird hourly chart, but even if you zoom out a little bit more and you can make it a